All right, today we're jumping right into an investment memo for a pretty interesting piece of real estate in Kuala Lumpur, Eaton Residences. We're going to break down its core strategy to figure out, who's this property actually for. Let's get into it.
And right away, this is the big question, isn't it? When you look at luxury property in a place like KLCC, you have to ask, is this thing going to be a reliable cash cow, just churning out income month after month, or is it a capital trap where your money just sits there, not really going anywhere? That's what we're here to find out. So first things first, what's the game plan here? The analysis makes it super clear that this building was designed with a very specific goal in mind. It's not trying to be everything to everyone. So, what exactly is its purpose?
And there you have it. This one sentence, pulled straight from the memo, is the key to understanding everything about this property. It's built to be a high-yield rental machine. But, and this is a huge but, it's not designed for you to make a killing on capital gains. That distinction is absolutely everything.
So what does that actually mean for you as an investor? Well, think of it less like a hot tech stock and more like a solid, reliable dividend stock. You're buying it for that steady cash flow, the rent that hits your bank account every single month, not because you're hoping to sell it for double the price in a few years. It's all about the income. Okay, so if the whole game is about rental income, what's the hook? What's going to pull those high-quality tenants in? Well, the analysis boils it down to what it calls the 3 golden pillars that really make the case for this investment. And here are the big 3: connectivity, views, and of course, yield. These 3 things work together to create a really powerful draw for a certain kind of renter, right in the heart of KL. Let's break down the most important one first. This number right here, you could argue this is the single most valuable asset the property has. We're talking a 150-meter, that's like a 3-minute walk, and it's covered, to a major MRT station. In a city that's legendary for its traffic jams, this is, without a doubt, a total game changer. And that connection is so powerful because it's just one single stop to the TRX, the city's huge new financial district. For the professionals this building is targeting, that means you can completely skip the nightmare gridlock and be at your desk in minutes. That is a massive selling point. But it's not just about the commute, right? The whole lifestyle package is a huge deal. You've got these incredible, protected views. You're either looking at the iconic Petronas Towers or the super green Royal Selangor Golf Club. You can walk to world-class shopping at Pavilion, walk to top-notch medical care. This whole combo is why it's such a magnet for corporate expats and the higher-end Airbnb crowd. And hey, you don't even have to take my word for it. Just look at the building itself. A whopping 62% of all the apartments are these smaller 1-bedroom or 1+1-bedroom units. See, this place was never designed for families. It was engineered from the ground up to be a purpose-built machine for the professional rental market. All right, so that's the shiny side of the coin, and it sounds pretty good. But a smart investor never just looks at the upside, right? So now let's flip it over and get into the reality check, the critical risks and the bear case for this property. And this is the big one. It's the elephant in the room when we talk about capital growth. Eaton Residences is a leasehold property. The simplest way to think about it is like a very long-term rental from the government. You own it for 99 years, but not forever. And as that clock ticks down, the value can hit a ceiling or even start to drop. In a market like KLCC, where the gold standard is freehold, owning the land forever, this is a fundamental disadvantage. And it's not just the lease, There are a few other real-world headaches you got to factor in. While that MRT is great for tenants, the building itself is still right on Jalan Tun Razak, which has some of the most soul-crushing traffic in the city. Then you've got the fact that the KLCC market is famously oversupplied with luxury condos, which keeps the lid on prices. And finally, if you're banking on Airbnb income, you always have to be aware of the risk that regulations could change down the line. Okay, so we've got the powerful reasons to buy. And we've got the pretty serious risks. Where does that leave us? What's the bottom line for an investor looking at this? Let's try to put it all together. The numbers really tell the story here. Just look at the price per square foot. It launched around $1,600. Today, it's a bit less, and the projection for next year is, well, it's basically flat. This confirms exactly what the memo said from the start. This is not an asset you buy expecting its value to pop. The data is pretty clear on that. I think this analogy from the analysis just hits the nail on the head. Eaton Residences is a financial workhorse. It's not a flashy racehorse. It was built to do a job, and that job is to deliver consistent, reliable rental income, month after month. It's not about a quick flip, it's about steady performance. So here it is, the whole story on one page. On the pro side, you have that incredible MRT access, those premium views, and a really strong rental yield. But on the con side, you have to face the reality of the 99-year lease, the brutal traffic, the oversupplied market, and the regulatory uncertainty. It's a true balance. And really, that's what this all comes down to, doesn't it? The question isn't whether Eaton Residences is a good or bad investment in a vacuum. The real question is about you. What does your portfolio need right now? So you have to ask yourself, are you looking for a steady, income-generating workhorse, or are you hunting for a high-growth racehorse? Your answer to that question tells you everything you need to know.